The crypto market slide continues, but are there any green shoots lurking? Welcome to the Daily Forkast, February 22nd, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, fear and uncertainty reign in the crypto markets today, and while Solana was up on Monday, it has since joined the free fall, taking a 13% plunge overnight. We're going to take a look at all the market action and a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, let's take a look at some of the top stories coming out of Asia today. First up, there is no stopping play-to-earn superstar Axie Infinity. According to data from CryptoSlam, all-time sales volume for the Axie Infinity NFT collection has surpassed the $4 billion mark. That's almost double that of its closest rival, CryptoPunks. Developed by Vietnam-based Sky Mavis, the Axie Infinity game allows players to battle using NFT creatures called Axies in order to earn the in-game token SLP. Now, players can then buy, sell, and breed more Axies as they move through the game, and it's this demand that's actually driving record sales. The game exploded in popularity in May last year, especially in the Philippines, when a lot of people found a way of making an income from home amid a COVID-ravaged economy. By the way, if you want to know more about this, head to our YouTube channel for NFT Insider Explainer series and learn all about it. Meanwhile, over in China, there's a Metaverse trademark frenzy brewing. China's National Intellectual Property Administration says a whopping 16,000 trademarks containing the word Metaverse have been filed for registration. However, the agency says it is firmly opposed to malicious registrations, including hoarding trademarks or piggybacking on the popularity of the Metaverse. Not only that, it also says the technology itself cannot be trademarked. Chinese tech giants including Tencent, ByteDance, NetEase, and Baidu have all filed applications, but none have been approved just yet. And last Friday, by the way, China's Banking and Insurance Regulatory Commission issued a warning against illegal fundraising, including exploiting fake metaverse projects. So could a crackdown be on the way? We're keeping watch. You can find those stories and more at forecast.news. Over to the markets now. Investors are wrestling with bearish sentiment across the board, with all major cryptocurrencies taking a tumble overnight. Terra's Luna fared relatively well, dropping less than 3%. However, Monday's holdout Solana fell over 13% in the course of 24 hours to Tuesday morning, Asia time. Forecast's Pradipta Mukherjee has more.
Solana had proved an exception to the caution that is prevailing over crypto markets, gaining 6% in 24 hours to trade at $94.52 on Monday morning. However, the overnight plunge left it at $81.48 by Tuesday morning, while Terra's Luna became the latest of the crypto top 10 to join the red zone that saw it trading at $48.83. Global markets have been shrouded in uncertainty recently, with concerns over rising tensions between Russia and Ukraine, and crypto is no exception. Ben Caslin of crypto exchange AAX told Forecast that all assets are stripped bare and tested for resilience in times of extreme market stress. He says Solana has seen drawdowns over the past few months because of network outages and controversy over how decentralized it really is. Meanwhile, Terra has benefited from its stake in the stablecoin market, which he sees gaining market share as regulatory pressures increase. However, he says both face more scrutiny ahead. Meanwhile, Bitcoin has been particularly volatile over the past month, ranging between a low of $33,184 in late January to a high of $45,661 in mid-February. According to the Bitcoin Fear and Greed Index, which is based around factors including volatility and trading volume, investor sentiment is currently in the extreme fear zone, which indicates that investors may in fact be too worried and there could be a buying opportunity. For Forecast, I am Pradipta Mukherjee.
A self-proclaimed cybercrime expert who's also a rapper, an introvert coder, and a $4.5 billion Bitcoin heist. Add the Justice Department to the mix, and you have a story that Netflix just can't resist. How will the multi-billion-dollar Bitfinex hack and its investigation impact the crypto world? Let's talk about it with Kelvin Lam, CEO of Lithium Finance, who's here with the DeFi download. Good to see you, Kelvin.
Thanks for having me again, Angie.
Man, I can't wait to cozy up with some popcorn here for this movie. It's almost unbelievable, the drama here. The Bitfinex theft of 119,000 Bitcoin took place in 2016. You and I both remember that. And the arrests have only just been made. But what explains the delays? Are the authorities only now catching up with the advancements in digital currencies and DeFi? How do they catch these culprits?
We saw from the prosecution documents that these stolen Bitcoins were involved in thousands of highly complex transactions and numerous accounts across many different platforms. But it also now revealed that there are a series of events that took place between then and just last month that leads to these ultimate recovery and arrest. And these include some KYC incidents with a few crypto exchanges, certain attempted tradings, and perhaps most dramatic of all, and this is the part that I love the most, that the purchase of a few gift cards just the year before links all these back to the couple's emails, IPs, and physical delivery addresses that ultimately revealed their identity. And again, because of all these, the law enforcement were able to gain access to their cloud storages and eventually, just last month, decrypted a file that contains all the accounts and keys involved in laundering that Bitcoins. So I think it's not really a case of delay, but it appears that the authorities have been actively using highly sophisticated tools that tracks all these Bitcoin movements throughout the years, and they seem to have been successful in taking actions when these events unfold and succeeded in recovering most of them.
It is incredible. The couple has not been charged with the actual hack, but with laundering its proceeds. Does this mean the hack has not been traced back to them? What does it say about the anonymity in the digital world?
I believe gathering evidence for computer crimes could be rather difficult at times, right? There has been no mention of who actually hacked the exchange, but the prosecution, I believe, focused on money laundering, as I believe they seem to have obtained elaborate evidence on how these Bitcoins have, flown through the system over the years. And they actually have evidence, they seem to have evidence of how the couple, control and access all these accounts. So I think it's really a question of the evidence available. And I believe this case really highlighted that although wallet addresses could be itself anonymous, without revealing your identity, but all the transactions on blockchains are, however, transparent and traceable. After all, total visibility is the very nature of blockchain, right? So many may even argue that crypto is more traceable than cash, especially like this case when these addresses are connected to real-world identities.
It goes to show that in the end, crime, I guess, does not pay, which is something that has been mentioned about this case. But when you take a look at the whole of the DeFi space, there are still obvious gaps there. There are still pockets where hacks occur on an unfortunately regular basis. What kind of gaps in the DeFi space do you think that this case brings to the fore?
Well, we saw that KYCs in this case at certain exchanges were instrumental in identifying the suspects and the couple in this case. I believe that the rapid growth in DeFi must have caught the attention of regulators, and many of them have actually started calling for DeFi to implement KYCs in similar way to those required of banks and other exchanges. I guess perhaps for a reason of dealing in situations just like this. Whether or not we should do KYC at all, or if how it should be done for DeFi is subject to lots of debate right now. But I think we certainly are seeing a lot more discussions and a lot more projects working on that area. So we'll be seeing a lot more happening, I think.
That makes a lot of sense. Well, Calvin, thank you so much for joining us. That is the DeFi download for you this week. And that's the Daily Forecast, giving you an Asian perspective on the blockchain world. Hit like, hit subscribe. We appreciate it always. Thanks for watching us here on YouTube. It helps us reach our goal to reach more of you. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.